Hey, internets, how's it going? Hope you're having a fantastic start of your week. I did a video recently on trading efficiency, the efficiency of your trading strategy, and how important that was. In this video, I'm going to talk about something that dovetails into that rather nicely. Have you had a strategy that starts working really well? You start making money. It seems like things are going great. Your win rate's going along just fine, and then it just kind of dries up. You no longer see your pattern. Or maybe you still see the patterns, you see the trigger, you get in, and there's just no follow through. You start getting stopped out more often. You start losing more and more money. And your strategy just seems like it dried up and you don't understand what's happened. And then you come to find out markets change. They change states. They shift. And the strategy that you've come to rely on, that you've begun to really enjoy trading and you've seen some success with, now no longer works. And just this incredible sense of frustration can come on you when that happens. So what do? Well, obviously trading the strategy you have isn't working. So you go to another strategy, or maybe you try a different market, or maybe both. Maybe you switch from trading the spot to trading futures or something like that. Maybe you go from trading stocks to trading Forex. Maybe you try commodities. But you find yourself switching up the game because what was working for a little while is no longer working. And this can be really frustrating because you just feel like, how often is this going to happen to me? When am I going to land on something that's just going to work? And I'm not going to have to deal with this thing where it works for a little while and then it stops working. And by the way, what's really going on here? Why does this happen? And is this normal? Is there some sense of predictability to it? Is there anything I can do about it? How can I be consistently successful, consistently profitable if the market keeps changing? Well, it turns out that when it comes to trading the financial markets, we all live within three specific states of the market. The market's either in a state of expansion, it's in a state of compression, which includes what's called rotation and transition. So it's essentially three states. It's rotation to transition to expansion. So let me just talk about what those three things are. Rotation is where the market is caught in a range. You have multiple candle bodies overlapping other candle bodies. The market will begin to move in a specific direction, but then it gets stuck and it doubles back, all within a relatively narrow range. So this is where mean reversion strategies live. That is, the market begins to break out and then it fails, it wicks back, and there's a lot of liquidity that exists between the highs and lows of that range. And because of this liquidity and a lack of strength or weakness, the market can't get out of that range. It's stuck there, ping-ponging back and forth inside there. And that's why mean reversion strategies work really well in this state. It's a compressed state called rotation. Then there's transition. Transition can be categorized as being within the compressed state. But transition is the whipsaw. It's the chop where it starts to break out. It looks like it's getting ready to run, and then it fails and it comes back, and then it goes back. It's this whole thing that's death by 1,000 cuts, where you think your market's starting to go, moving averages look right, you get in, but it still doesn't follow through. And then it falls back on itself, flips back to the backside of the range, and of course, stops you out. And then it swings back. Oh, maybe I was right all along. It is going to go that way. So I get back in, and then it does it again. So that's the transition phase. In the transition phase, there is no strategy. No one makes money in transition phases. That's where people just lose money. And then the third stage is the expansion stage. The expansion stage is where most traders live, and that is in trading the trend. So that's where the market is on a nice move. It's not reverting back to price consistently. It's continuing making new price. Bodies of the candles are not overlapping, and so the market is grinding, or it's on a charge. So those are the three states. And depending on the type of strategy you trade, this is the secret, depending on the type of strategy you trade is going to affect whether or not your strategy thrives in a rotation market or in a expansion market. And for most of us, it's in the expansion market. And that's why following the trend typically works for traders, because if there's a trend, then the market's expanding. When the 200 is laying flat, you are in rotation or in some stage of compression between rotation and expand or a transition. And that's why in those circumstances you don't win. I mean, it's like a 50-50 shot, because there's no trend. And if you're getting any kind of signal, if you're seeing any kind of pattern that develops, the problem for us that trade momentum, essentially, there's no follow through. If the market's not following through, it's not going to get to your take profit. You're not going to make any money. And it's going to flip back, roll back, and hit your stop loss eventually. Or you're going to get discouraged and cut it early and take losses every time it does this, and it feels like it's not going to run. So yes, it's true. The market does change. It will change states from rotation, caught within a range, mean reversion strategy works here. Transition, which is where it's making the change from rotation into expansion, where nobody makes money. And then finally, the expansion market, which is where you don't want to trade if you are a mean reversion, because the thing just keeps going. But you do want to trade a momentum-based strategy. So how do I deal with this? How do I know when a market's going to go from into this compressed state? If I need this expansion market to trade my trading strategy, how am I going to handle the markets when they go into compression? And the answer is essentially this. First, you have to take your strategy, put it into a strategy tester that you get from MetaTrader, like MT4, MT5, and back test that for several years. You want about 4 to 5 years of back testing data. Your strategy, what it must do is accomplish two basic things. It needs to be able to hold your returns pretty much static with wins and losses. It should be ping-ponging in the years or months when the market is in compression. And then you'll see this, that equity curve will just take off when the market goes into expansion, because that's where your strategy finds its edge. What if my strategy doesn't do that though? What if my strategy falls apart and I lose money consistently through those compressed rotational markets? What do I do about that? The trick here is to use what's called a regime filter. What I've just described to you are called regimes. So what you need is to put in place a regime filter in your indicator or in your EA, so that it's looking back at the market, and it's looking back, say, 10 days, and it's waiting for that expansion to happen. So it's not going to take trades when your market is just churning in rotation. It'll help take trades out where the market's not really expanding. And then once it gets into expansion, it needs to also watch to see, is the market in continual expansion? In other words, if you just put in an average true range indicator to check this, for instance, it's going to see that expansion initially, start putting you in more trades, and then if it's sort of leveled out in the way that it's climbing, it doesn't see the market as expanding anymore. And so it'll start reducing the number of trades, even though you're in that key moment of expansion, which is where you want to trade. So your regime filter needs to do just a little bit more. It needs to identify for your trading strategy, yes, the market has now turned and it's now in expansion. Your momentum-based trading strategy, maybe it's a breakout strategy, opening range strategy, whatever it is, this is the time to trade it. It needs to also be able to identify that we're also on a slope and this thing is moving in the right direction for you, to make sure you keep getting those trigger signals to get into the market. And it's not necessarily your strategy, although it's important to back test that market. Make sure that it's not something like GBP USD that has one expansion market maybe every 4 or 5 years. And the rest of the time you're just losing money, or you're just in a static state. So when you do your back testing and you see that your trading strategy, oh my gosh, for 2023, it didn't do anything. It was just sideways. It was just flipping. That's good. That's good, because that's what you want it to do in a market that's in compression. What's important is that when it finds its edge, what does it do? What does it do? Hope this has been helpful, and I'll see you in the next video. Take care.